Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
What's up, everybody? Friday morning. It is the daily market commentary. Hope you guys are having an amazing day as we are wrapping up our week. Had a daily market commentary out on Wednesday, but unfortunately had some internet issues and didn't get it loaded. So, though I call it a daily market commentary, today's only the third day we've done one this week. So let's go ahead and dive right in. For those of you new to the channel, we look at the same futures markets every day, identifying potential breakout trades and reversals from an educational perspective. All right, starting off. So we are down this morning, down 33 points in the S&P. We are down really hard. However, we're not, overly surprised by this fall. Matter of fact, if you are regular viewers and you are subscribers of TradersArmy.com, we talked actually about our 15-minute reversal level, which wound up being the high of the day yesterday. We were in a live trading room. We had looked at a potential short area here off the 15-minute chart. Price has hit this level, and we got a very strong move away. Now, this was certainly bolstered by last night's trade. I guess we have a new trade tariff coming, which bolstered this strong move down, and now price has come into the area, which was essentially a 4-hour demand area, but more or less it was a target for a short. Target for our short. Now we've come back into this area here, which is a level that was formed way back. This is so we're going pretty far back in time to find this level. And when I look at this on a daily chart, one of the things we pointed out yesterday is that we officially now have lower swing highs and lower swing lows on a daily chart. So we're in a daily downtrend, and the lower swing highs and lower swing lows on a daily chart means something important. And what it means is that we have officially switched trend directions. So, we've seen a very strong sell-off overall in this region. And now I'm looking primarily at shorts. Have been for a while, but on the on these charts, it's primarily short levels that we're identifying. So though we're into this little level of demand here on the 1-hour chart, I don't anticipate this level of demand holding. Matter of fact, I think there's a chance we're going to sell off a bit more today. So if you've missed a lot of this move, where can you get back in? So I'm going to remove this level here. I anticipate that we're not going to get a huge reversal off of that. Where can I get back in? Well, if I go to a 15-minute chart, I do have a little level right here that you may get another shot to re-engage on the short. It's a very small level, and your stop has to go above the prior pivot. But this little level right here may give you another chance to re-engage the short position in the downward move. For those of you that trade the gap, this is a good opportunity for a potential what's called a gap and go, outside gap when the market opens during the day, during the cash session. But we essentially just reversed right off of our 15-minute level, and that's really where we've been moving from. So if you were able to hold that one, then great. Now remember, we are coming into a Friday, so if you want to hold this thing over the weekend, understand that you want to protect it utilizing some options. So we have a video that we did on futures options. I'll put the link to the futures options video in the comment section below, so that you can watch how we use options to hedge our futures positions. In the Nasdaq, so in our NQ level, we were looking at this level yesterday, this blue line, which was our breakdown from earlier in the week, and we were kind of basing around here. And we had said, listen, if you're so inclined that you want to get bullish, then theoretically you could get bullish above here, knowing, however, that our big picture trend is still down, and that the Nasdaq is probably a better shorting opportunity than anything else. So this move down has continued its move. Now we don't have any demand in the Nasdaq for a while. I'm going to remove this line here. I think we've hovered around that line long enough. When I look at this Nasdaq level, hitting our first target in the Nasdaq, and eventually I think we're going to make it all the way down to this second target. that 4-hour level comes into play all the way back here. So I think that ultimately we could get all the way down to the 70.85 region some point today. If we get a bit of a rally, you got a little level up in here. Same thing on the 15-minute chart of the Nasdaq that we had in the S&P. You might get a little opportunity to get short again somewhere right up in here at this region. This is a really nice level as well. So if it happens to get through that one, then you still have this area here formed right around the European market open that you could have another shorting opportunity as well. I do like to look for things around the European market opens. I always find those to be pretty effective times to get into those positions. Crude oil. So in our crude oil levels, prices have continued to fall hard in crude. We had this tiny little level from a while back, but our big picture trend has completely shifted direction, right? We are now officially in a bigger picture downward trend. So no 15-minute levels are going to hold, all right? Don't even think about a 15-minute level holding when I've got a 4-hour downward trend, right? Because our impulsive move is going the other direction. So now it's all about where's the opportunity to get short on some sort of a rally. And if I look at an hourly chart for where price may rally, I've got a couple of levels here up above, but I like, this one right in here is probably the one that I like the most. Problem with some of these levels is that in a really strong downward trending market, we've not retraced back to any of these quality supply levels. And so this would be the next one for us to not retrace to. But this would be the next one that hopefully we can get a little bit of a rally up into. If you want to go to a 15-minute chart, you may see a little area of opportunity right in here as well, which is formed right around the European market open. So I'm going to keep both of these on my radar for today. And as we saw in the S&P, a 15-minute level can be a very strong and very useful level when it's with the big picture trend direction. So this would be the area that I would look at for today in crude oil, in case we can make it back up to this $56 area. Gold. Now, gold did just the opposite. Gold actually came down to our demand area, which was this gap fill level, and this is a rollover gap fill. So those of you that are using certain brokers, you don't see these levels. Not every platform shows up this way. I was talking to some of our subscribers that are on a different platform, and they didn't see this move, right? They didn't see this gap. Now, price hit this level and boom, popped way up to our supply area, which we looked at yesterday as a supply. And if I look at this supply level, we did actually get a little move away from it. But 1, 2, 3, 4, 5, 6 candles after we got our little touch and go, what had price done? Well, it essentially had done nothing. So at 6 candles, if price hadn't done anything, it's time to move your stop to break even. That's the purpose of the 6 candle rule. That's why that rule exists. And so the worst that should have happened on there is your break even, right? And that's why that rule is there. It's to get rid and to keep myself out of trades that are probably not the right fit. So now what I'm looking at is this area right down in here. And the reason I'm looking at this one, if we get a little bit of a pullback, is that it was acting as a little bit of a resistance. We dropped, we based, we rallied, then we popped up out of there again. You could go to a 15-minute chart, and very much like the equities markets, you may get a refill back in here. But I like this 1298 by 1296.80. All right, next let's go take a look at our bonds and currency markets. Bonds and currencies. So looking at our bond markets, looking at this yesterday, we had said, if you're more aggressive and want to try, now understanding that it's completely counter trend, there was a little opportunity here to get short on, and it says it's this little wick over wick level here. But remember, anytime you're going counter trend, you're lower probability, and then no surprise, we popped right through there, right? And that's really the reason why we talk so much about trend. Trend is really the key. And we're going to use and go with that trend direction way more often than not. And prices are strongly rallying. Still have a demand area down in here where there's a potential buying opportunity. When I look at this on a daily chart, we have, I don't really have anything until way up here. This is really our next daily chart pattern level. Okay. Now, if we notice, bonds have been steadily rising since October, right? We've seen a really strong rise in the bonds since October. Prices have continued to to just march higher and higher, and so this would be the area where, on a daily chart, you see your next strong level of resistance. So, if you can get long on a pullback or even on a breakout, then you've got a good shot and a good opportunity. Next, let's take a look at the Aussie. So in the Aussie, we were looking at this little level for a breakout last week. We talked about it. We got our little move down to here, came to the opposing level, popped up, and then I said, well, I feel like there's still a lot of weakness in it, and we moved down. Well, so this level, yesterday we talked about this little level of supply as a potential reversal. So we got a nice move into that in the overnight hours, and we're starting to move down off of that level. If you got short on this one, I think it's a good opportunity now to take your stop and move it to break even, as that level seems to be working pretty effectively, but you've already moved more than a 3-to-1 reward to risk, so I would take some money off the table, or at least move that stop to break even as that's moving its way. Looking at the euro, I was really liking this euro supply, but I don't love the fact that we're getting all these upper wicks coming up into here, and I think that from here you could get a candle-to-candle reversal opportunity in the euro, but the level is still above. And then in the Canadian dollar, same rules in the Canadian dollar are applying to crude oil. We are in a 4-hour downward trend. I do not anticipate a 15-minute level to hold. So when I look at this 15-minute zone, let me go back and look at it on an hourly chart. This level was formed way, way, way back here. I'm not so sure a 15-minute level is going to hold. We do have some pretty clean hourly demand down here that, remember that our 4-hour is big picture trend is down, so it's counter trend. There, you have a better chance of the hourly level holding than you do of this 15-minute level. Now, this 15-minute level could cause an intermediate time frame bounce, for you that are more aggressive kind of day trader style, and you might get a shot somewhere up into here to get short again. But this thing's just been falling pretty much overnight for quite a while, as that one's definitely showing a lot of weakness. Last and certainly not least would be our Great British Pound and Japanese Yen. And when I look at the pound and the yen, those ones are the markets that have been a little bit more, they were a little bit more sideways, but we got a breakdown idea in the pound. So let's look at this one. So in the pound yesterday, when we were looking at it, we looked at this area here. If you wanted to try a breakdown below this low, we got 1, 2, 3, 4, 5, 6 candlesticks, and then nothing. So the move on that is to shut it down for break even. That's the trade that really it set itself up for. On a 4-hour chart, we definitely have our bigger picture downward trend, and so prices are continuing to move lower. If you want to give another shot at getting short, you can look at a reversal level, and certainly this reversal level up here is a very obvious reversal zone. So that would be where we would look. In the Japanese yen, we've rallied hard into our confirmation short entry. Now, when I go to a 4-hour chart, that's a confirmation short because we almost touched it once and started to move out. So if you wanted to give this one a try, I still think it's possible. Your stop still has to go above this pivot here on the 4-hour. You need for price to have halfway into the level and then get short as it comes out of the level. We're not getting basing into it, which is a strong sign. So your activation is somewhere up in here. So what I'm going to do is create an alert when it gets to that level. So I create an alert when it gets to that level. It gives me a chance to get a text message on my phone and look and see where price might come into on this level. So, well, those are our areas that I'm looking for today. Remember that we are heading into a weekend, and anytime we head into a weekend, if you hold a futures position over a weekend, you inherently take gap risk and you have more risk. a good way to hedge that risk, and certainly you're never going to be able to remove that risk unless you're not in the market, but a good way to hedge that risk is to use options. So if you've got any questions on options on futures, I'll put a link to the class in the comment section. But until Monday, everybody, I hope you guys have an amazing day. I will talk to you soon. See you.